In this video, I'll show you patterns, ThinkTickle's historical similarity engine. You point it at a chart window, any symbol, any date range, and it finds the closest historical analogues across the entire corpus, then shows you what those analogues did next. It's pattern recognition with receipts. Patterns lives at the Patterns route, accessible from the research group in the More menu. Like Ask AI, it's an elite tier feature. On a Pro plan, you'll see an upgrade prompt instead of the engine. The header shows the ThinkTickle brand with the Patterns subtitle, with the standard navigation bar next to it. Before we look at the controls, here's the thesis. Every chart pattern you stare at today has happened many times before, on many symbols. If you can find the most similar past setups and look at how they actually resolved, you have a base rate for whatever you're about to trade. Not a guarantee, a base rate. That's what Patterns gives you. Across the top is the controls bar. 6 things to configure before you search. Let me click through each one. First, symbol. Type the ticker you want to study, could be the one you're trading, or a market proxy like SPY if you want a regime read. Second, the date range, from and to. This defines the pattern window. The shape inside this range is what the engine will compare against history. Minimum 3 trading days, maximum 60. Pick a range that captures the move you find interesting, a recent breakout, a pullback, a base that's been forming. The 2 date pickers default to a sensible recent window so you can search right away if you don't want to set them manually. Third, scope. 2 options. Top Liquid scans the 300 most traded symbols and finds the closest matches anywhere in that universe, the most general read. Let me switch to same symbol. Same symbol restricts the search to the symbol's own history, which is useful when you want to see if this specific stock has had this shape before. Let me flip back to Top Liquid for the demo search. Fourth, Top N, how many matches to return? 5, 10, 15, or 20. Start with 10. Fewer matches reduces noise, more matches give you a wider statistical base. Let me set it back to 10. Fifth, forward, how many days into the future to evaluate each match? 5, 10, or 20 days. The engine takes each historical match, looks at what price did in the days after the pattern ended, and reports that as forward return. Sixth, history, how far back to search? 30, 60, or 90 calendar days. Note the cap, the backend will not search past 90 days. The interface used to expose 1-year and 4-year buttons, but every request silently clamped to 90. So the team removed the longer options and is transparent about the actual limit, trust over feature surface. When the configuration is right, click Search Patterns. The button turns to a searching state with a spinner. A loading panel appears below, scanning historical patterns. Comparing the current shape and volume profile against every symbol in the corpus. Usually 3 to 10 seconds depending on the date range. When the search completes, the results page is dense with information. Let me walk you through it section by section. At the top, the pattern's intro card explains how the engine works for first-time readers. Just below it, the honest read card translates the raw aggregates into plain English. For example, after this pattern, the stock was up at 1 day, but only marginally, and the spread of outcomes was wide enough that you shouldn't rate it as a one-sided bet. Below the honest red is the search stats line, symbols scanned, windows compared, total matches found, elapsed milliseconds. Often you'll see numbers like 57 million windows compared in 8 seconds, that's the corpus the engine works against. Next is Aggregate Forward Performance, the most important section. 3 or 4 blocks depending on the forward window you picked, 1D return, 5D return, 10D return, and 20D if you asked for it. Each block shows the average return across all matches in big bold green or red. The median return below it in smaller font. Below that, the range from worst to best match, useful for understanding how spread out the outcomes were. And finally, the percent positive, what fraction of matches closed up over that forward window. Watch the median against the average. If the average is plus 3% but the median is plus 0.1%, your aggregate is being pulled by a couple of huge winners. Most matches went sideways. If the median agrees with the average, the pattern has a consistent forward tilt. Below the aggregates is the top matches grid. Each card is one historical analog, ranked by similarity score. Card header, a hash rank badge, the symbol, the start and end dates of the historical pattern, a score bar showing similarity from 0 to 100%, and the similarity score in monospace. Inside the card is a small overlay chart, 3 lines. Cyan is your query pattern. Amber is the historical match overlaid on the same normalized axis so you can see how closely the shapes track. Green is the forward continuation, what the price did in the days after the pattern ended. Below the chart, the footer shows 2 correlations and the forward return badges. Price correlation is how closely the normalized price shape matches. Volume correlation is how closely the volume profile matches. Both numbers run 0 to 100%, higher is more similar. The return badges show 1D, 5D, 10D, and 20D forward returns for that specific historical match. Let me rerun with a different config to show how flexible the engine is. Switch scope to same symbol, bump the forward window, and search again. Same workflow, different question. Now the engine is looking inside SPY zone history for 20-day forward returns. The first time you run a search, a card walkthrough banner appears above the first match card, teaching you what each piece of the card means. You can dismiss it once you've read it, it won't come back on subsequent searches. At the bottom of the page is the legend that maps each color back to its line. Cyan, query pattern. Amber, historical match. Translucent green, forward after the pattern. Same colors you saw on every card. A few configuration patterns that work well. Trading a breakout? Pick the breakout day plus the prior 10 to 15 days as your window. Scope, top liquid. Forward, 5 days. This finds the most similar breakouts in liquid names and tells you how those resolved over the next week. Trading a pullback? Pick the pullback range, maybe 20 trading days from the high. Scope, same symbol to see if this stock has bounced from similar pullbacks before. Forward, 10 days. Look at the percent positive, that's your base rate for the bounce. Regime check? Use SPY or QQQ as the symbol, set the window to the last 20 days, scope top liquid. The matches will be historical periods that looked like today's market. Look at the aggregate forward to see how those periods resolved. This is one of the most useful uses of the engine, and it's free of any single name bias. Honest limitations. The engine uses 90 days of history max, you can't query against decades. Pattern similarity is shape and volume based, it doesn't account for fundamentals or news, so a match shape from 20 years ago in a different regime is treated the same as one from last quarter. The forward returns are price only, they don't include slippage fees, or the practical question of whether you'd have actually held the trade that long. Treat the engine as one input. Combine it with what you know about the current setup, the macro, the catalyst, the regime, and weight the base rate accordingly. Three errors you might see. Pattern window too long means you picked more than 60 trading days, shorten it. Pattern window too short means fewer than 3 trading days, widen it. And a server error means a transient backend problem, wait a moment and retry. Three patterns for getting value from patterns. First, the trade prep check. Before you enter a setup, run a similarity search on the chart window leading up to it. Read the aggregate forward and the percent positive. If the engine says historical analogues went up 65% of the time over the next 5 days, that's confirmation. If it says 48%, that's a flag, the setup might be more random than you think. Second, the regime mirror. Once a week, search SPY's last 20 days against history. The matches tell you which past market periods today resembles. Look at how those periods resolved, that's your read on the next few weeks. Third, the contrarian pro. When everyone is bullish on a setup, run same symbol patterns on that ticker. Read what happened after the closest analogues. If the historical base rate disagrees with the consensus, you've found a contrarian signal worth weighing. On mobile, the controls bar collapses to a stack, symbol, date range, then each toggle row. The match cards collapse from a 2-column grid to a single column. The mini overlay charts stay legible because they're drawn at vector scale. Everything is reachable, nothing is hidden. That's patterns. Pick a window, pick a scope, pick a forward horizon, and let the engine find the past setups that match. Read the aggregate first to anchor your base rate. Read the individual match cards to feel how the analogues actually moved. And remember the rule of thumb, the median is more honest than the average. Pattern recognition is what your brain already does. Patterns just gives you the data behind it. Find your